Welcome back to the Liquid Math channel, where we use AI-powered market analytics for crypto investors and to those who wish to learn about crypto market analytics. In today's video, we're gonna look at Bitcoin. Bitcoin looks weak, sentiment is collapsing, and everyone thinks the trend is broken. But the data is quietly telling a very different story. Today, we're breaking down the signals most traders never see. So as of December 16, 2025, Bitcoin is trading near $87,200 in a market where the fear and greed index sits at 22, deep in fear. Across Reddit and YouTube, the dominant narrative is clear: the bear market has arrived. But here's the problem: markets rarely behave the way the crowd expects them to. Today's episode isn't about calling tops or bottoms, it's about understanding why Bitcoin feels weak emotionally, but stable structurally, and why that disconnect matters. Let's start with the facts, price and volume. Let's anchor to the data. On December 9th, Bitcoin traded as high as $90,640. Since then, price has drifted lower to around $87,200, a pullback of roughly 3.8%. That move alone isn't unusual. What is important is what happened to volume. As price moved lower into the $86,000 to $88,000 range, volume declined, not expanded. Recent prints are around $49 to $50 million, significantly lower than early December activity. This tells us something subtle: selling pressure is not accelerating. Let us look at Bitcoin from a few more angles. Angle number 1: this is not a panic sell. In true bearish continuations, price falls and volume expands. That's how trends break. Here, we see the opposite: price is drifting sideways to lower, while volume compresses. Most people miss this because fear dominates perception. But mathematically, this looks more like absorption and consolidation, not distribution. Angle number 2: sentiment is more bearish than structure. Reddit sentiment is overwhelmingly pessimistic. You can read things like weekly bearish, monthly bearish, bear market arrived. Yet structurally, Bitcoin remains well above $80,000, no weekly support has broken, and pullbacks remain single-digit percentages. This is a classic sentiment structure mismatch. People confuse frustration with trend failure, and those are not the same thing. Angle number 3: Bitcoin is acting as a liquidity buffer. One Reddit comment accidentally highlights something important. Bitcoin is functioning as a 24/7 global liquidity buffer. When stress appears, whether it's rates, FX shifts like the yen carry trade, or macro uncertainty, Bitcoin is often sold first, not because it's broken, but because it's liquid. Most people misinterpret this as weakness. In reality, it's usage. Narrative on Reddit and recent YouTube comments is: the bear is here, this cycle is over, 73,000 is loading. However, the reality is Bitcoin is consolidating above $86,000, volume is declining, and no structural breakdown has occurred. When sentiment collapses before structure does, markets usually stall, compress, or squeeze, not immediately crash. Now let's look at macro context: why jobs data matters. U.S. private employment has improved for a second consecutive week. That reduces immediate recession fear and supports a higher-for-longer rate environment. That backdrop favors range-bound behavior, not explosive trends in either direction. Now let's look at the Liquid Math Market Pulse Index, LMMPI. The Liquid Math Market Pulse Index, LMMPI, is something that I created with the help of AI, and what it does is that it scores the coin from 0 to 100 based on price structure, sentiment, macro pressure, and hidden signals. 0 to 20 is extreme risk, which means panic conditions and a high crash probability. 21 to 40 is defensive zone, means that fear dominates, and there are only high-risk setups. 41 to 60 is neutral zone, which means that the market is undecided and choppy with mixed signals. 61 to 80 is constructive zone, which means that data favors continuation. This area holds the best risk-reward ratio. 81 to 100 is overheated zone, is strong trend but growing blow-off risk. Today's LMMPI score for Bitcoin is 61 out of 100. This reflects intact higher time frame structure, declining downside momentum, but unresolved direction and weak sentiment. This is a compression regime, not a trending one. Now let's look at the risk map. Base case is that Bitcoin continues to range between $85,000 and $90,000, frustrating both bulls and bears. Upside path is a reclaim of $90,000 to $92,000 with expanding volume opens the door toward $95,000 to $100,000. Failure mode is a clean breakdown below $84,000 on rising volume increases the odds of a deeper reset towards $78,000 to $80,000. Final takeaway and forecast. The most likely outcome over the next 1 to 3 weeks is sideways compression, not collapse. Bitcoin isn't trending, it's arguing. And when markets argue, patience, not prediction, becomes the edge. This has been the Liquid Math. If you found value in this hidden signal breakdown, subscribe for more LMMPI updates and data-driven crypto analysis that cuts through the noise.